Great. So hello, everyone. My name is Davon Rees. I am the CEO and founder of Vesterr, which is a crowdfunding platform. There we go. So we on brand. Crowdfunding platform for commercial real estate. Just going to walk you through it. Some of those is your first time with us. So welcome. Crowdfunding, for those who don't know what it is, crowdfunding is just basically a pool of funds coming together. I'm investing through a website. Okay. So think of like GoFundMe and stuff. So there are 4 different types of crowdfunding. You have reward based, where if you invest, you'll get some type of incentive, maybe like a t-shirt or something like that. Then you'll have a donation base, or like a GoFundMe, where you donate and you don't expect to get anything back. You just hope and pray that it go towards a good cause. Equity base, where you would invest and get some type of equity. You're investing in a security. In debt base, where you're pretty much investing in a loan. Basically, you're becoming a bank. I just want to say that I am not a financial advisor. All investments are risky, so definitely before you make any investment decision, you definitely want to consult with your CPA or your financial advisor. Okay. All right, let's keep it going. So what is a funder? A funder is our term, our term, investor term, as a way, think of it as the sponsor, they're the issuer, putting the deal together, and they're coming on Vesterr to raise capital. So Mike Ely and the Lion Fund will be our funders for tonight. An investor would be you all. The investor is our term, or our way of saying you as an investor, and you're coming in and actually investing in the security on our platform. Just a little bit about Vesterr for those who don't know. Vesterr, we are Regulation CF, so that means Regulation Crowdfund, and we focus primarily on commercial real estate projects. So think of us as an alternative way to invest in commercial real estate, or alternative way to raise capital. So what sets us apart from other companies or crowdfunding platforms, we accept both accredited and non-accredited investors. So for those who don't know, an accredited investor is someone who has an income of $200,000 or more, or a net worth of $1 million or more, excluding their primary residence. A funder can raise up to $5 million, and we're also a member of FINRA, which is the Financial Industry Regulatory Authority. So we're not just a website. We had to go through a lot of compliance to actually get approved and present this to you all. So our goal at Vesterr is to connect you as an investor to funders. And you can just go directly to our website to invest, vesterr.com. You can do wire transfers. That's how you can invest. Or you can use your credit or debit card up to $5,000, but that's only if the deal has a minimum of $5,000 to invest. So there are no fees to you to invest on Vesterr. We are not going to charge you. So if someone says, hey, you got to pay to invest on Vesterr, guess what? That's not Vesterr. That's not what we do. As an investor, you do not have to pay. I know we've got some questions. People were confused. No. Y'all went to the wrong site. The only person who will have to pay, or company who will have to pay, will be the funder. So that's how we get compensated. We get compensated from the funder, and we get 5% of their total raise. That is me. For those who don't know who I am, again, my name is Davon Rees. I am the founder and CEO of Vesterr. I started off as a front desk agent, co-owner of 3 hotels across 2 different states, and I founded Vesterr in 2021, and we actually launched in 2022. So this has just been an amazing experience. We had our first successful raise a couple months ago, and I know we have some investors on the call who invested, so they made history with me. So I appreciate you all. And Anand Patel, he is over our technology, and he has been in the technology space for 12 years. So definitely, I recommend, if you're not already, stay connected with us. We are on LinkedIn. We are on Facebook. If you have any questions, feel free to send us a note at invest@vesterr.com, and be sure to sign up for our mailing list at vesterr.com. If you don't have any questions about Vesterr, I am going to pass the mic over to Mike but that's so funny. Before I pass the mic over to Mike, okay, I'm sorry, that was a little joke. But But before we move on to Lion Capital, does anyone have any questions about Vesterr in the investing process?
And not only that, to add to that, Dave Vaughn, does anybody have any questions about investing? Like, what motivates you to come up to this call today as well? What is your expectation to get out of that? So if you type that in, because I want to make sure I'm taking care of everybody's answers before I jump right in. Somebody's talking about financial freedom. Okay. Anything else you wanted to learn? Is this some of you guys' first time investing or having the idea to invest, or you're just looking for a new strategy? Just type it in the chat and I'll answer it. And so I know what we got here. So I just won't jump right into a deal. Okay. Learn more about funding and current hotel development. Okay. That's Jonathan. Anybody else? Anybody looking for tax strategies or um, looking for tips here? Uh-oh, did I lose everything? There we go. All right. Any other questions? Learn more about that financial freedom. Okay. Well, then I'm gonna talk a little bit about investing, and then I'm gonna show why. I'm gonna talk about why I invest, and what else I want to talk about? Why I invest, and our Lion Capital Fund. All right. So like this whole thing of investing, like um, imagine waking up to a life where your money works for you. Okay, like instead of like coins clicking in your pocket every day, right? It's replaced with cash distributions hitting your bank account every day, every month. Like this type of financial freedom is not just a dream, but it's like really, it's a real reality. All right, that's in reach now. For some of you, retirement may be a little different. You may have a different vision. It may mean different things for you. Some it may mean you have to sell off assets. Others you may do a reverse mortgage. Some you may downsize, or in some it could just be enjoying passive income from previous investments. Now passive income to me, right, is like choosing an investment vehicle of your choice in real estate or stocks, uh, and that vehicle takes you to your investment destination, and in return it will reward you with distributions or dividends. So, because we're doing real estate, it's going to be distributions. Now, although this investment vehicle is on cruise control, right? You're in the driver's seat, but you still have some work to do. It will drive like a Tesla, but you still have to get in the vehicle, put your hands on the steering wheel until it reaches that investment destination. But normally, that's what we call the general partner or the general manager, right? That's the person who's navigating to the destination, reading all the signs of the market, and propels to that projected investment return. Now, passive income is going to allow you to increase your wealth and improve your financial stability. And if you have the sufficient passive income, you can attain the life you envision, not the one you end up by default. All right. Anybody want to obtain the life they envision? All right. Anybody want to attain the life they envision, or you want the life you have by default? Type it in there. Okay. So again, with minimum efforts, uh, these assets will generate income, but you still have to pay attention to where it's going. Now, a lot of times people always ask the time, when is the right time to invest? I don't think people understand. There's no perfect time to invest, right? Like guys, never perfect time to start a family. It's never perfect time to have a kid. It's never perfect time to buy that first house. It's never perfect time. You just got to do it. I mean, if you really want to know like the perfect time, I don't know, Monday at 9:30 a.m. I don't know. No. Like, look, without a doubt, there's different cycles in the market, or what we call, actually they call them phases of the market that you can invest in. And over a 20-year period, there's some phases that's a better time to invest than others. But overall, you have to adjust to the market, right? You always adjust according to what the market is going. For example, I mean, if interest rates are higher, you still may do deals, but then you invest with lower loan to value, meaning less debt, which is where you see some of the market going now. Um, if we were probably in a recession, then you would look for more discounted opportunities in different sectors. Now, there's different ways of being a passive investor, right? One, you could be a lender or like a debt provider. That's one who, basically you act like a lender, and you what we call it clip a coupon. Like you lend 100,000 at 6% interest. Well, over a period of time, you're gonna make 6%, but you can make anywhere from 10 to 12%. Now, there's also what they call syndication, which is kind of similar to what we're talking about. That's another great opportunity. I invested in syndication. I created multiple syndications, and a lot of times when you invest in a syndication, people like to 2x their money in 3 to 5 years. And again, they're relying on the general partner to maximize this value and get the upside. All right. So I think you guys get an understanding. Is everybody clear with that? Anybody got any questions about that? Okay. So I want to get into and one other thing, like the general partner would be me, right? I'm me and my team would manage the day to day, and we would sign for debt. We would do day to day operations where the LP will be you. Would you have limited liability? You wouldn't have to sign for debt. You wouldn't have to sign for the legal documents. You just collect the check as the property paid out. Okay. So let's go. I'm going to show you a couple of things here. And there's multiple structures, right? There's like 70-30, 60-40, and what some of you are like, well, what does that mean? Well, like there's the 70-30. 70% will go to the LP, 30% go to the GP. There's 50-50 splits. 50 goes to the general partners, 50 go to the LP. The splits, like, it doesn't really matter as long as it's producing the return for the investor like yourself is hitting the goal. So if you got a great project that's hitting the goal, then that's what we want to hit. All right, so let's look at, and I'm going to share my screen here. Is this right here? Yeah. Okay. I'm going to pull up. Okay, yep, this is it. All right. Let's do my slideshow. And hold on, I gotta share my screen. All right. Okay. Can you see my screen? If you type in the chat, you can see my screen. Yes, okay. And then we got a QA here. Where I've been a hoteler, especially in hospitality finance management. Okay, all right, got you, anonymous attendee. Okay, so those who don't know me, I've been investing since 1999, own over 1,500 units, 40 different houses, a warehouse, a few parts of land. I'm doing a $120 million development, mixed use of hotel apartments and condos. We're vertically integrated, meaning we're doing our management, construction, all in-house. Right. Now, today I'm going to talk about apartments and hotels. Now, why is it the time to invest in apartments or multifamily? Well, guys, we are moving to what we call a renter's nation. As you can see here in this highlighted, the current rates around 7%, but the average median house in the U.S. right now is right around 393. Now, some places you look and say 400, but it's right around 393. So at a 7% interest rate, your monthly profit, principal and interest comes out to be $2,100 a month. Now look at this. The average rent is at $1,800 a month. Now that's about a $400. What is that? $300 difference there, right? But it's even a bigger gap. That 2162 does not include taxes. It does not include insurance. It doesn't include maintenance, right? So by the time it's done, a person's mortgage payment or housing expenses will be about $2,600, $2,700, maybe even $3,000. Whereas a person could go and rent something for $1,800. They'll have all the amenities like a pool, a weight room, a video center, a meeting space, right? They wouldn't even have to pay all these different fees to add to their housing expenses. They can have it all in one place, like their own little resort, and only pay $1,800, or they can go buy a house and pay almost $3,000 a month in expenses. This means apartments rent is going to start going up over the long term, right? There's going to be even a greater demand for rent now instead of buying. All right. Here's some apartment buildings that I've done myself. There's one of the 40. This is part of a 30-unit complex that I've done. This was a 19-unit. I know you guys wouldn't believe me, but literally, I bought this thing for like $3,000, and we put over $400,000 in over a 3-year period. It's increased to over $1 million. This one right here. This one as well. We purchased for 1.7, and now we gutted it and redid everything. Now it has a value over $4 million. This is another one we did for 1.7. No, this one's, I'm sorry, we acquired all in for $800,000. It's now worth over $2.3 million. Like, these are amazing opportunities, and my point is, more and more people are moving to renting. Why invest hotels? Well, the reason why we like hotels so much is it has more cash flow. Now, don't get me wrong, I still like my multifamily, but I love hotels. You got cash flow. You can acquire cheaper. You got branded hotels. You got a global customer base. All right. You get more tax write-offs. Like, what does that all mean? Well, let's talk about this. Just to give you an idea, when you're buying an apartment versus a hotel, okay, the bottom line is it's all about cash flow. And if you have $1 million NOI, meaning after expenses, before debt, it's $1 million NOI. If that was an apartment that had $1 million NOI at a 6 cap, that means I would have paid like $16 million for that property. But at a hotel, the cap rate is going to be a little higher, so I could probably buy that same cash flow at an 8 cap for $12 million. Just $1 million, same cash flow, but I bought it $4 million cheaper. Anybody want to buy something for $4 million cheaper? Type in the chat yes if you want to buy something $4 million cheaper. Right? And so in the branded hotels, the other reason why we like branded hotels, they have a global customer base, meaning they have a loyalty brand. Like, let me ask you guys, when you think of a hotel, what's your hotel when you go out? Is there a certain hotel you like to stay with? Is it a Marriott? Is it Hilton? Is it Hyatt? Type in the chat which hotels you like going to. Is there anyone you're dedicated to? Marriott, Bra said Marriott, Jonathan said Marriott, Hilton, right? And so my point is, don't get me wrong, I'll like a boutique or a small little Airbnb, but when you have a hotel that has a brand and has loyalty, they already come in with a customer base. and they do a lot of marketing for you. So all that's already done for you, and you just have to treat the client. And then you still have to create a sales team to generate more income. Now, the other great thing about hotels are the tax benefits. Oh my goodness, it's mind blowing what you can get in tax benefits. So, literally, some of these hotels, we do what we call a cost seg or a celebrated cost segregation. In layman's terms, it's depreciation. So, to give you an idea, our hotel will net 300,000 a year, but because I did accelerated depreciation, I have some depreciation. I'm able to write off $300,000 in that year. So guess what? That wipes out my cash flow. That creates a tax basis for me. So even though we made a profit, but we had depreciation, it wipes out the potential taxable gains I have to pay, and you would pay zero taxes. Those are some of the amazing things. So some of you, you're like, Mike, I'm making money, but I want to retire, but I don't want to pay any more taxes. Well, acquiring a hotel and larger developments, if you can obtain the benefits of that, you can obtain more depreciation to write off some of your gains in your property or in your total income. All right. Here's a few hotels that I've done here: Home to, Staybridge, Hampton Inn. We own these across 3 different states. Why invest in apartments now? Now, here's the other thing. I know we're talking about hotels, but I'm going to show you about apartments, and it goes the same for hotels. 56 billion of multifamily mortgages matured in 2023, and those will be foreclosed on in 2024. All right. There's over, quite frankly, there's over $1 trillion worth of apartments and hotels that mortgage are due, and over 18% are going to default. That's all going to happen in here in 2024 and 2025. Why? Because these people can't afford the debt. Let's look at these. Now, I know I'm talking about multifamilies, but it's the same with hotels. Uh, Here we go. You got, let's see, dollars and billions. So you got all these different loans maturing: 10 billion, 47 billion, 97 billion dollars in loan. Okay? And here's an example already. This guy here, lender, this is just one of many. He was in, I think if I'm correct, he's in New York. Is this right? No, he's in San Francisco. What happened is interest rates, these people had interest rates at 2 and 3% or 4%. Now interest rates have jumped to 6%, 7%. Literally, their interest rates have doubled. I mean, they can't make payments. And if you're doing something like San Francisco, they have a different strategy on how they buy, because they use lower rates because they bet in on appreciation. So some of these deals have very minimum cash flow because of the cost. Well, when them rates jumped up, his cost could not cover the new debt payments. And guess what? He lapsed on the loan. Banks took it back. And this is the same in apartments and hotels. Why invest in hotels now? Hotels have over $247 trillion of hotel mortgage matured, right? Billions of dollars here. It's going to be a hotel tsunami, like Blackstone. They defaulted on loans, like multiple people turning in $1 billion. Ashford REIT, 19 hotels they gave back to the hotel lenders. These are the opportunities available now. So I'm gonna stop right here. Let's see here. And I'm gonna share you the Lion Capital Fund and other projects that we have and why we invest. So now you kind of got why we invest in these things. I'm gonna share with you what we're working on here. Where we go here? Sorry about that. Okay. Oh my goodness. All right, let's try it this way. Okay. All right. Can you guys see my screen if you type in the chat for me? Yeah, I think you see it now. Yep. Okay. Thank you, Carlene. All right. So now here we have the Lion Capital Fund, and actually, this is a project that we just closed on. It's a total over 600 units in Hamilton. It's a suburb of Cincinnati. So major project, over $60 million. We've raised over 20 million, and these are some of the projects in there. Our team's done over $2 billion worth of hotel real estate transaction as our team. Um, Investor qualifications. You could be accredited or non-accredited for this potential deal. The investment structure is a 30-70 with the general partner and limited partner. All right. And the investors will act as the LP, as we shared before. Our mission is to create wealth for individuals like yourself, and we've had access of a combined 100 years of real estate experience, all the way from hotels and apartments. We're highly selective in our underwriting. We don't meet projects just because they meet the investor thresholds. Like this project has to perform, and with that, that's what we work on to acquire those deals. We don't just buy in Cincinnati. We focus on tier one, tier two cities or a growing population where there's opportunity, growing employment, growing population, growing economic drivers, lower crime rates, right? And we excel forming strategic joint ventures. And so we're vertically integrated, meaning we can handle everything in house. Uh, so our overall goal is to find value add projects. Uh, there's target projects ranging from 500,000 to 15 million, but that's not even limited. Like I said, we just did a total close over $20 million, over $50 million. I'm sorry. But we will do some new developments, which is I'll share as well. We have you could be actually through the line fund, and because we have now what we call a 506 Reg A, you will be able to invest in the Sarasota project if you would like to be a part of this through this line fund. Okay. Uh, and then here's some of the people that's working on this. This is just limited partners who work kind of day to day in that. And these are partners and students of mine. I'm Mike Ely. I shared that. Tim Vest. He's on for 1,800 units now. John Katzman has done over over $100 million in real estate as well. Uh, we've done over 1,000 units. Like I said, 5,000 hotel rooms. We haven't lost any of our investors' capital before, and returns of IRR are going to average 15 to 20%. And these particular projects we're doing now, they'll average anywhere from 7 to 10% cash on cash return. Now, here's some examples that we showed that we actually did a cycle on. I shared a picture of the exterior earlier. This was, but this one actually is different. This one that we bought for 128, it was 128 units. We acquired for 3.2, put 200,000 in, capex 1.5. To make this long story short, we bought this for 25,000 a door. We put 10,000 a door, so we were all in for 35,000 a door. And in 3 years, we sold it for over 70,000 a door. Like we doubled the money on this. Like it was a $4 million return, double the money. Like these are amazing. Here's kind of before and after of what we did at the project. Here's another apartment deal that we did. This was a Hassel and Spruce. Again, we were all in this one for about 800,000. We still own this. This was what's so great about this. When we acquired this, the rents were like $300 or $400. We pushed the rents up to $800, $900. That created value of over 1.8 million. Well, now we did this is what we call a home run deal. It's the infinite cycle. The reason I say that is we bought this property The rents continue to increase and the value continues to increase, so we can continue to refinance when it comes to turn, pull out more equity, pull out more cash, and continue to own the property and cash flow. Those are what we call home runs, also called the infinite return. Here's another one that we did as well. Here's a hotel that we just finished renovating. Uh, this was $7 million deal. We're all in for 10. Let's see, 10 million, 11 million, be worth $17 million. We have two more hotels, the Staybridge, the Hampton. Those things are really doing a major turnaround and creating much value, and we'll go after more hotels as well. Okay, so this is the Lion Capital Fund. I'll now take some questions. Let me stop sharing my screen.
Mike, there was a question. Oh, well, no, it wasn't a question. They were saying that. Oh, thank you. We see your reason. Okay.
Let's see. I don't know. I kind of went to the dark all of a sudden. Okay, that's okay. Oh, that's better. Okay, well, we got
Okay.
Hi, Michael. Thank you for your kind note. But if you're seeking investors for a project, please send a note to invest. Oh,
Oh yeah. No, we had somebody saying they was seeking investors. I was saying that they're seeking investors. They could send a note to invest@vesterr.com.
yep.
Yeah. So did you all have any questions about the okay, there we go. It says, is there a tax benefit for those who invest with you, Mike?
Yeah. So uh, now it depends on your designation, but yes, we do pass tax benefits over to our investors, and if you're able to utilize those, it'll be a great benefit, especially if you have what we call uh, professional real estate designation. But if you don't, that's okay. It just doesn't mean you can claim all of it at once, or you may have to take it over a 2, 3 year period of time. But just to give you an example how powerful depreciation is, um, we have one of our partners, and I'm not saying this to brag or anything, but yeah, because I'm not doing that. But they literally make 5 million a year, like net profit, because of the hotels, because of depreciation, because of the cost seg. They pay zero in federal taxes. Zero. Isn't that crazy? Is that crazy? Am I by myself? Would anybody like to pay zero federal taxes? I'm by myself here. Okay. I'm a realtor. Oh, Carlene, you'll definitely get to take benefit of that. Right. Um, Bra Robinson, hope I'm saying that. Can you explain the difference between a GP and an LP? Yeah, sure. So a GP is the general partner. Okay. That's the person who deals with the day to day. They make decisions. They sign for debt. They source the debt. They raise the capital. They hire the contractors. They hire the property manager. They're doing all these different things. They're responsible if the debt doesn't perform. So they will be on the hook. Whereas the limited partner, you're just a passive investor. Typically, you don't have any voting rights, and everybody does the report. Like literally, you're just getting in the vehicle, going for the ride, and they give you a return. So if you, just to give you an idea, if you vested in the stock market, technically you bought shares of that company, and therefore you're an LP, unless you kind of did it like a mutual fund. Okay, but it's kind of the same thing. All right. Mighty Quinn asks, does my percentage of the equity on Line Capital Fund bring me over to a net worth over 1 million so I can be considered a credit investor on future with you? Okay, let me ask you that. Does my percentage of equity on the Line Capital bring me? Well, I don't know. Depends on how much. I don't know what your net worth is. So, but yes, it adds to your net worth value. It does. That definitely does. Um, And if we have your percentage of value has that spread that you need to be considered having a net worth of $1 million, or you're generating over 250,000 a year, if the line fund helps you do that, then yes, it will do that. To invest, I would need a set up a self-directed IRA, non-accredited investor. So you don't necessarily have to do a self-directed IRA. It's good to have a self-directed IRA because it helps um, offset your gains. Now, again, I'm not a legal expert, but I have self-directed IRA, so there's a couple things you have to deal with. Now, when you invest directly into a property with no debt, that's really clean for a self-directed IRA. But when you invest in a LLC or buy shares and that asset has debt, you may be subject to UBIT, uh, 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 unrelated business income tax. Oh, yeah, unrelated business income tax. So that'll be a different tax additional tax that you would have to pay. So if you do use your self-directed IRA, which actually stops you from paying taxes, but if it has debt, you may have to pay that UBIT. So you just want to be careful of that, okay? Um, but no doubt, like I love self-directed IRAs. Okay. What else can I answer for you guys?
Mike,
So,
did you talk about the minimum investment? What's the minimum to invest?
oh, okay. So to invest now, the minimum I think through your platform is $20,000, or is it 25? I can't remember. It's
I think you mentioned 25,000.
yeah, 25,000 minimum investment. We got a 5 year hold. Actually, it's down to about 4 years now. So you will hold on to funds for 4 years. We'll be investing in hotels and apartments. So this is a REIT. Uh, and these properties are already performing except for the development. And actually, these developments actually look like they may get sold where another larger JV equity group is looking to fund the entire project and buy our shares out. But that'll be a great opportunity for you guys to just jump in and jump right back out. So how many total units is the Alliant Capital Fund? Total overall, it's a $4 million, $5 million fund. So I don't have the exact number of units, but there's a $5 million fund, and we're raising $1 million, just over $1 million right now. And if you would like to be a part of this, you would need to sign up now and get your documents together. There are some legal docs that we're finalizing, but you can fill out your documents now, invest in through Vesterr, and you would put your funds in, and we would put your money to work. And again, because these are already investing in existing assets that are performing, the Lion Capital will be starting to pay out. Uh, you should start receiving funds probably in 60 days or less. So those are the exciting things. Carlene's asking how she can sign up. Uh, Davon, would you put the information for Vesterr in there, please?
Oh, I'm already on it. Here we go. There's the link for you all. And you will also get a copy of the recording as well. The pitch deck is on the website, and within 24 hours, the recording will be on the website as well. So I just put the link in the chat for those who want to sign up to learn more and to potentially invest.
Yes, Lonnie. This, as she just said, this. Well, the Lion Capital will be there, but as you said, we'll send you a recording as well that you can review.
Okay.
Uh,
Yep. I just sent you all the link. So that way you all could potentially invest. Yes.
Yep. So this is an amazing opportunity. Like the time is now. It's now o'clock. Everybody's saying when's the best time, the perfect time. Again, now is the perfect time. There's so many great opportunities that we're going to take down uh, due to this market and because of the defaults. Like literally in Texas, a lot of these loans are coming due. They're going to refinance, and they're going to refinance from 2 to 3% to 6 and 7%. Guys, I don't know if you realize this, but they're not going to be able to hit their debt coverage ratio. If type in the chat, say yes if you know debt coverage ratio, no if you don't know what debt coverage ratio is. Am I still frozen? Okay. All right. Type in the chat yes if you know debt coverage ratio, no if you don't know debt coverage ratio, and I'll explain it to you. But there's only so many loans out there that families and hotels are going to be in default. So don't miss out on this opportunity. Sign up now. Get with Vesterr now. Sign up for the Line Capital so you can take advantage of these great opportunities. Did I freeze here, Davon?
Yes, you did. I thought it was me, but yes, you frozen.
But you can
Okay,
hear
so
me
we have
now?
another question that says, I think you already explained, but as a passive investor, we have to pay taxes on our returns and do not get to take advantage of the write-off. Is that correct?
And you have to discuss with your tax accountant or your CPA, whoever's handling that for you. They will have to confirm that for you. Um, a lot of investors get to take advantage of it, some don't. Uh, Robinson had a question about debt coverage ratio. So, debt coverage ratio is. Can you hear me okay, Davon?
We can hear you. We just can't see you.
Yeah, I'm freezed up here. Debt coverage ratio basically, so a standard debt coverage ratio is 1.25. That means the one stands for the loan is producing 100% of what's owed to the bank, right? Then the 2.5, the point over, states that that's the percentage that is making over the debt assigned to the bank. So if you got a 1.25, that means the bank is that deal is making 100% of the debt that's due plus 25%. Well, now these banks or these properties, they're not hitting 1.25. They're not. A lot of healthy ones will hit 1.4, 1.45, 1.6. Some of these are barely hitting one. That means they're not producing enough income, enough cash flow to pay the debt. Now, it's not. So here's the other thing that you may not realize: the debt, or it's bad enough that interest rates jumped up, but what's even more happening is inflation, and so although rents increased. Some places they didn't increase significantly enough, and so now the mortgage payment increased, the mortgage payment increased, cost increased, but yet the rent is at its max because it's competitive. So some people are dropping their rate so they can bring people in. That's why there's this amazing opportunity that you guys need to be a part of. And as the Lion Capital, those are the type of projects we're going to go after with amazing returns. All right. Davon, you
Oh,
still there?
great. Do we have any additional questions? I'll go ahead and put the link in the chat just in case that it got lost.
I don't know. I'm still frozen. Uh-oh.
It says, what is the minimum to invest to be able to vote? Well, I can answer. So in order for you to have voting rights, you have to be considered a general partner, and you wouldn't be able to do that through Vesterr. Only people who can invested they're investing to become a limited partner. So I don't know if you wanted to Mike, I don't even know if you're open to general partners for the Lion Fund.
Not at this time. Um,
Okay.
Not at this time. But you know,
Okay.
yeah, opportunities. Right now, we just focus on land capital. I won't go there right now. But yeah.
Mhm.
I'm trying to figure out the play for myself. I'm signing up. Okay, we got it there. Okay. Well, hey guys, I thank you so much for spending time with us today. Definitely, I'm free for more conversation. But please sign up through Vesterr for the Lion Capital Fund. If you have any questions, I can do another call. I have one of my investor managers sit on a call with you, or if you have some other people that you feel will be a great fit for this, please share with them, and I can assist as well. But the bottom line is, I want to help you get to your investment destination, uh, to whatever it is that you want to do. Whether it's take that family vacation, or it's to help support your kids going through college, or expedite you to get to retirement. I'm here for you, and my goal is to provide a service. You know, our core values are based on commitment, consistency, discipline, and service, because we have to be committed and consistent in doing what we do every day and provide you the greatest service that's possible. So I just thank you for your time, and looking forward to being part and having you a part of our LPs of the.
Oh, well, I think we lost Mike. He probably had a technical issue, but yes, I'll just echo him. Thank you again for you all tuning in. We appreciate you all, and we will see you next time. And if you're not, sign up for our mailing list. Again, my name is Davon Rees, founder and CEO of Vesterr, and we thank you for being part of this presentation. You all have a wonderful evening. Thank you. Good night.